Welcome to BQ Prime's earnings conversation with Patanjali Foods. And I have with me Sanjeev Asthana, the company's Chief Executive Officer, to decode the fourth quarter result. Good morning, and thanks so much, Mr. Asthana, for taking the time.
Good
But
morning.
Patanjali
Thanks
Foods
for
has
having me.
posted a Right, sir. Patanjali Foods has posted a decent set of numbers with net profit up 12% and revenues up 18%, driven by the food business. But your EBITDA has fallen 20% in the fourth quarter, while margins has also contracted, from 6.1% to 4.1% a year ago. So, could you tell us what are the primary factors that impacted your margins and where the margins are headed from here on?
So the prime factor, if I were to look at the entire year, we've broadly gone through the biggest upheaval in the edible oil markets, in the last 30 years. So the prices, if I were to look at a year back and now, they've dropped by almost 50%, across the commodities. The second quarter that we witnessed, the prices suddenly fell almost like a rock. It impacted the businesses, both domestic and international companies, immensely. That trend stabilized in third quarter, and fourth quarter again we are witnessing there's a slide in the prices, which is having some degree of impact in the way this entire sort of edible oil market is playing. As a player, which is naturally long, which means that we need to procure our supplies from the international markets, and some cases the supply chain extend between 45 to 60 days. So the impact on the dropping prices is adverse normally on a company like ours. We don't expect this to continue, because the prices are reaching a point where the downside might be, just about 10%, but the upside could be pretty substantial. So I'm hoping that this year should become much more positive, and we should be on course to return to the healthy numbers that we have on the edible oil side. On the food side, our business has been quite remarkable, and we had the 3 quarters, run on the food business that we acquired. Biscuits has a growth of more than 20%. We have done almost 1,300 crores in the biscuits. Nutraceuticals was upwards of 500 crores that we had, and Nutrela, which is the other category, we've done more than 550 crores. So in general, a healthy set of numbers. Food, very satisfying. Edible oil would have been a lot worse. We've done way better. And a lot of good initiatives are on cards for us to see healthier growth in the years to come.
Okay, so your food portfolio has grown 15 to 20% during the year. So if I have to look at the quarterly run rate, what it would look like going ahead?
So we had a quarterly run rate of about 1,700 crores this year on a pretty consistent basis, give or take 50 crores either side. We are expecting now with the this year, when we get all the 4 quarters with the foods also incorporated, our expectation is that we should be doing about close to 7,200 crores during the year, could be marginally more as well. And at that rate, we should be pretty much on course. We're doing a little short of 2,000 crores every quarter. About 1,700 crores or thereabout is what our expectation is from the business.
Okay, Mr. Asthana, how has been the demand in terms of volumes? We have seen rural also recovering gradually. What is your take on rural demand, and what is your outlook going forward?
So our view is that we had challenges in 2 quarters when we clearly, distinctly saw that the rural demand was lower. And then, of course, in the third quarter, we saw a sudden spike with the wedding season and harvesting, etc., that happened. Slightly subdued earlier, but I think now there is a healthy uptick that we're seeing in the rural demand. So that growth I'm anticipating between 5 to 8% is what we see in the rural areas. In the urban centers, the demand is pretty healthy. So one is that we'll ride the natural organic growth which the sort of both urban and rural areas are giving us. But also some of our categories are growing way faster. As I mentioned about biscuits, that grew 20%. Nutraceuticals, which is almost a new business for us, that we clocked very healthy growth. So I think we have a growth momentum on our side. So not only are we growing along with the market, but we are also growing at the cost of perhaps the smaller players, or with the wider distribution reach that we have. It should have an uptick as we go forward.
Right. And in terms of your edible oil business, what has been the volumes during the fourth quarter?
So our volumes, for the year were 1.91 million tons, which was almost 19% growth over the previous year. And we are clocking, typically every quarter, every month we're doing almost 1.35 lakh tons. So typically in this quarter, we would have done close to about 4.2 lakh tons in the fourth quarter. And we expect to maintain that momentum. So we have moved to a different trajectory altogether. Earlier, our monthly revenues sales were about 1.05 lakh tons to 1.10. Now we've moved to a very safer trajectory of 1.35 to 1.5. And I'm expecting that we will maintain this growth, typically between 3 and 4% should continue.
All right. And are you also planning further price cuts in edible oil, given that raw material prices continue to spiral downwards?
So we have taken, all the, because the commodity, you cannot keep higher prices. It pretty much works on a pass-through basis. So we've taken 2 rounds of cuts, both at the MRP level and the operating price level. And I think right now, for the moment, we are done, at least for next 15 days. But if there's a situation warrants that we need to reduce it further, we absolutely will take the price cuts further.
All right. So how much price cuts have you taken so far in this fiscal, in the, FY23?
So very substantial. We've almost dropped our prices by anywhere between 30 to 40 rupees kilo, in terms of between second and third quarter, between third and fourth quarter. And if the prices continue to spike downwards, we are quite happy to take further sort of cuts on that. We will be consistent with the market. We'll reflect the drop in the prices. And we want to be right up there when it comes to giving the best value to the consumers.
Right. There's a lot of focus on premiumization in the food segment across, companies. Given your vast portfolio, where is Patanjali's focus going to be?
So we had in our investor calls and in the earlier, calls as well. There's a very decisive move towards premiumization. And within June itself, I'm expecting that we'll be not only announcing, the plans that we have, and not just the plans, we'll also be launching it. So I can sort of pick one by one. In the nutraceutical space, we've completely redone our, the portfolio and rebranded that, come out with a lot of contemporary product range like chewables and gummies and whey protein powders and flavors, etc. Redesigned the entire sports nutrition range that we're expecting in the third week of June. We should be launching that. In biscuits, we have come out with the 3 variants, which are the healthier options that we are now launching. Will get announced and will be launched, not just announced, will be launched very soon. The additional 3 variants which are on the cards. And in case of Nutella, we have come out with millet-based products. The first one will get launched hopefully soon, within June itself. And thereafter, we are adding more products on the millets in the healthier category. And the last one is our big push towards the dry fruits category. We're working quite actively, both in Nutella as well as Patanjali, where we've tied up on the supply chain side with some of the largest makers in the world. And that push is going on. And we're quite hopeful that this should help us, both expand our margin profile, as well as bring in newer consumers in the urban-centric areas who are looking for better value proposition and superior prices.
Okay. And what would be the sustainable rate in terms of margin growth going forward?
So foods, we currently, in the current year, last year we did about 18%. And the expectation is that with the premium sort of categories that we launch, they should be giving in a margin range of anywhere between 20 and 25%. The base will be small as we start, but over a period of time, we're expecting that we should have a healthy rate of margin. The target is that on a blended basis between premium and all the categories put together in the food space, we should want to inch closer to 20% from the current 18%.
Okay. So, one thing that you have always spoken in our earlier calls as well is exports. So, what are your plans to expand your overseas business in FY24?
So that plan is going quite a foot. Last year, we clocked almost 530 crores we did. We've exported to almost 31 countries. This year, we are expanding our exports reach. For example, biscuit exports, I spoke about, we have a dedicated team now. We want to build up that portfolio. This year, the target is anywhere between 50 to 70 crores is what we do year one in a branded distribution segment. Likewise, on Nutrela, there's a big plans afoot that earlier it used to go through multiple different channels. Now we're setting up our dedicated distributors and doing that. Nutraceuticals, we have made a small beginning in South Asia itself. We've achieved our first set of orders, but we want nutraceuticals to be a very large category because the scope for our profiled products is very high, and we're very positive that we'll be able to build up into very substantive export push. So exports is going to be very core part of our strategy as we go forward, and we're quite bullish that we should be able to successfully execute on that.
Okay, and your plans on the palm oil plantation, are those on track? And what have been the key developments here?
So very much on track, and I'm glad that you asked this question because we've nearly tied up for the imports of the sprouts, which are imported right now from across Indonesia, Malaysia, Thailand, Costa Rica, and the sprouts that we have are fit to plant 25,000 hectares. The second big effort is that we've put together almost 18 nurseries in northeastern part of the country. We have signed MOUs with all the state governments now. So Northeast, 5 states across Assam, Arunachal, Mizoram, Nagaland, and Tripura. In South, between Telangana and Andhra. And so that part is done. We've started construction work on a first oil mill in Arunachal Pradesh in a place called Pasighat, which got inaugurated earlier last year. And now the work is going on full steam to get that mill commissioned. Likewise, we are setting up almost 150 farmer producer organizations to bring in the farmers to a fold and provide them all the necessary aid and wherewithal, where we'll be the exclusive buyer of the oil palm that they produce, which is in the northeastern part of the country. So a lot of work is going on and still a work in progress. It's a very intense operational job that we have on our hands. We are pretty confident that we will be able to grow that. And we will have in fullness of time, it will be one of the mainstays and large business for us, which is going to be the big drivers of the company's growth in the future.
All right. Thank you so much, sir. It was a pleasure talking to you.
Likewise. Thank you so much.